the floor of the CME Group, this is Danny Riley on this Thursday, October 21st. We're going to make this kind of a short S&P equity thing because we're going to bring somebody new on. But basically what happened is the S&P sold downtick this morning down to the 77.5 level. That was the low of the day. And then it rallied up to all the way up to 86. When it got up to 86, it backed off a little bit and then a few handles. And then when it got back up to 86 again, it made a high by one tick. Hello to the pit bull rule. Whenever the S&P has made a 10-handle move or something like that, and you go up into like 10:30 or 11 o'clock our time, New York lunchtime, and you make a high by one tick, that's never good. The S&P just made a new low down at 76. Now listen, today we're going to bring in George Cavaligos. He's very, very well known in the interest rates, both on the old CME floor and on the current CME floor over, the combined trading floor of the CME Board of Trade. He's got a great background in this. He's one of our guys that comes on the IM that fills us in with the interest rates, and more power to George.
Hi guys, George Cavaligos here. People that have been on the chat know who I am. I'm a 10-year Eurodollar bond specialist. Been in the markets now about 30 years. And I look at the world from a technical viewpoint and a scientific viewpoint. Danny had brought up the topic of the one tick higher high in the stocks market today. Well, we had the same thing happen yesterday in the 10-year market. And students of market profile theory know a one tick higher high where the market doesn't build on that and make higher highs is called a failed auction. Those are sell signals in our world. The same, conversely, on the downside, if you make a one tick lower low, those are buy signals. The failed auction process where the market's trying to develop a new level and it doesn't have the follow through buying or selling is a reversal signal. We saw it yesterday in the 10-year. We put up the sell signal on the IM. When the 10-year traded its highs at 127.07 yesterday, we had it right up there on the IM instantly. Failed auction, put a small short on in the 10-year here. This morning's email, Danny had it posted up on the chat, said to cover against 126.20 to 126.25, at least half your short position. Conversely, again, we also wanted to add to shorts if we could break the 126.20 level. Market right now is holding a 126.20 low. We're watching this very, very closely right now because that 126.20 level is a key Elliott wave support level that if we break that level, projects a move down to 126.02 and perhaps even lower in a powerful third wave possibility. So we want to keep a real close eye on the market right now. We have a flat position in the 10-year at this point, looking for maybe a bounce off this 20 level. If it gets back up to 126.27, I want to try and put a small short back on. And if it breaks the 126.20 level and spends more than 5 minutes below that level, we want to put some shorts back on. Tomorrow we have option expiry in the 10-year options where there is still a lot of open interest in the 126 puts that might support the market here. I'm not betting on that because there are other factors, and we've been pointing these out over the last couple days on the chat. Open interest has dropped as the market has rallied the last 2 days. Those are not good underlying strength signs. So we're looking definitely to sell rallies, and or if we can break some big support levels, we want to add to the shorts here. It's a pleasure being up here. Hopefully we'll be doing this on a more frequent basis, guys. Hope to see you soon.